Hello, and thank you for tuning in to the MacDesk Floor Report for Thursday, October 6th. I'm Rebecca Darst from the MacDesk, speaking to you live from the trading floor. We're in slightly positive territory right now, although the market's been a little bit subdued. Obviously, traders and the market overall feeling very reflective following the death of Steve Jobs. We had weekly jobs data that creeped, with initial claims creeping back over a level of 400,000 this week, this following a seasonally distorted figure last week. The ECB left rates unchanged this morning, although ECB President Jean-Claude Trichet did announce some new liquidity measures for the European money markets, including unlimited year-long loans for European banks and a plan to buy back 40 billion euros in covered bonds starting next month. So right now, people also talking about mortgage applications data this morning and news that the 30-year fixed mortgage rate has dropped below a reading of 4% for the first time on record. The VIX is up for the first time in a few days, despite the fact that we are about 50 points higher in the Dow. However, retail stocks are a pocket of outperformance this morning following a bevy of same-store sales data for September. And for more detail on the numbers, I'm joined by Charlie Brown from the MacDesk, who covers retail. Charlie, what is the takeaway for the month of September?
I think we're pleasantly surprised by the month of September. Given all the economic conditions that are out there, it could have actually been a disaster. But September tends to be a swing month. It's got the benefit of appealing from a back-to-school standpoint and also a holiday standpoint. I think from a back-to-school standpoint, some of the back-to-school sales that might have occurred in August based on Hurricane Irene got pushed into the first couple of weeks of September, so that certainly helped. So that's one reason. Also, we had lower gas prices. We had heavily promotional area because, again, as I said, it was a swing month between back-to-school and holiday. They want to reduce inventory in back-to-school over that period of time, so there's very promotional activity going on. And then finally, we had unseasonably cool weather during the month, which prompted need-based apparel sales that we wouldn't normally see. So, to put it in perspective, if the S&P on a month-by-month basis was down 7.2%, the S&P retail sector was down 3.5%, and the S&P apparel index was actually in a positive range of 2.3%.
So looking ahead to the holiday season, what are we looking for there?
Holidays is everything really to retailers. Generally, the last 2 months of the year can make up 40% of a retailer's sales. Currently, we're looking at estimates of up 2.8% to 3%. That certainly looks muted, but if you look over a 10-year period, the overall average is 2.6%. So 2.8% is not bad given all these economic conditions.
So they're holding up well. All segments of retail?
All segments are holding up well. It might be a little more muted in the high-end retailers as the stock market tends to swoon a little bit. Some of those people with the higher incomes tend to put their hands back in their pockets a bit.
Excellent perspectives from the master, Mr. Brown. For additional market insights, check your inbox at 1 p.m. for the midday. For now, I'm Rebecca Darst, and this is Charlie Brown for the MacDesk Floor Report.